Welcome back to Alpha Recap, your quick post-close roundup of what moved markets today. We've got geopolitics, AI cash burn headlines, and some interesting corporate moves to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Today's session was driven by three main threads that cross sectors and asset classes: Iran-related headlines, debate around AI spending at Tesla, and a push toward recurring revenue in tech led by Apple's reported leasing program.
Right, and markets closed with flows concentrated around energy, defense, and tech because of that mix. So let's start with the geopolitics piece, since that was the immediate market mover.
Iran state media claimed it targeted U.S.-linked sites in Bahrain and Kuwait, and that lifted risk premia across oil, shipping, and insurance today. Traders pushed money into energy and defense names pretty quickly.
The practical takeaway was a bump in short-term uncertainty, higher shipping costs, higher insurance for Gulf routes, and a watch on near-term oil moves. Analysts warned this kind of headline-driven move can be short-lived without official confirmations.
Exactly. Independent verification was limited, and the next three things people were watching were official statements from governments, crude oil action, and shipping cost gauges.
Right, and to add to that, currency desks were already repositioning. Bank of America reportedly had a short Canadian dollar versus Japanese yen stance, which fits with institutional teams turning headlines into tactical FX bets.
So geopolitics wasn't just about oil. It fed into FX, insurance pricing, and defense flows all at once. Big ripple effect.
Short reaction. Right.
And now on to tech, which honestly was the other big story.
Tesla's cash burn narrative took center stage. Coverage flagged figures like 30%, 23%, $25, and $1.44 as data points that could materially affect runway and earnings per share sensitivity in scenarios.
Yeah, and the simple framing here is AI and full self-driving development can be a big upside if it monetizes, but it also requires heavy upfront capital. That increases the stakes around cash flow, potential dilution, and delivery momentum.
So analysts framed two tensions: the upside case if AI pays off versus the downside of a shorter runway or the need for new capital. That dynamic pushed more news-driven volatility into the stock today.
Which, to be clear, is not a recommendation. It's just how modelers are rethinking assumptions.
Apple was the other headline in tech, with reports the company is preparing an upgrade leasing program for devices to drive renewals and recurring revenue.
That concept is straightforward. A leasing option encourages customers to trade in and upgrade more often, which could convert one-time hardware sales into more predictable revenue streams.
Analysts reacted by widening price target ranges, roughly $237 to $310 in the models we saw, because uptake, financing costs, and churn assumptions change the valuation math.
Right, so recurring revenue models often get higher multiple treatment because they're seen as annuity-like. But the details matter: how they account for the leases, what the churn looks like, and whether margins hold up.
And that's the broader pattern. Markets rewarded recurring revenue shifts while being more critical of big, upfront AI capital outlays. Execution timelines and funding sources were the differentiators today.
Moving into financial services and wealth tech. Allocate Right rolled out a national launch of its AI wealth platform across registered investment advisors, pricing it at about $90.
That's a fairly low price point intended to accelerate adoption among smaller RIA shops. The idea is faster proposal generation and better advisor productivity, which can boost operating margins over time.
And the industry angle is this: automation and recurring fee models create pressure on incumbents. Analysts referenced big wealth managers as benchmarks when thinking about competitive impacts.
Short reaction.
Yeah, that tracks.
Let's talk healthcare and legal headlines. The IBD Summit, hosted by Johnson & Johnson, highlighted AI and digital health work in gastroenterology, and the National Alzheimer's Collaborative launched an early detection initiative.
That's potentially meaningful for diagnostics and companion therapies. Faster adoption cycles, public-private funding, and different risk profiles for companies in that space.
But there are offsetting legal risks. Hagens Berman opened investigations and investor notices for a biotech and a recent IPO, which raises the specter of class action volatility and distraction for management teams.
So the healthcare sector is seeing a duality. accelerated AI-driven opportunity on one hand, and elevated legal and regulatory scrutiny on the other. Analysts say that increases dispersion across the group.
On the corporate deal front, Kraft Heinz jumped after announcing a multi-year supply partnership with Disney. Those kinds of brand and distribution tie-ups can be near-term re-rating catalysts if revenue uplifts are quantifiable.
And SNA International picked up a federal contract worth about $135.6 million for AFMES support services, which provides backlog visibility for that government contractor profile.
Right Traffic also bought Expert Traffic Control to expand in the Pacific Northwest, though terms weren't disclosed, so the impact remains qualitative for now.
These mid-market M&A and government awards were a reminder that concrete top-line catalysts still matter, especially for small and mid-cap names.
Quick note on intraday flow signals. The Bitcoin futures ETF rose about 1.6% on very heavy volume, roughly 440 million in volume, which shows continued interest in crypto-linked products.
Several growth names and fintech-related names posted gains on heavy turnover, while a media-type name slid down about 4.5% on high volume. American Airlines finished the day up about 1% on heavy trading too.
Analysts pointed out that heavy volume with small price moves often foreshadows either consolidation or an imminent directional break, so volume continuity is a flow signal to watch.
Emerging themes we tracked. AI remains a double-edged sword. Recurring revenue models are being rewarded while AI-related capital intensity is getting more scrutiny. Legal and IPO-related scrutiny is increasing volatility for new names. And geopolitics continues to feed cross-asset flows.
What to watch tomorrow? Confirmations on the Iran, Bahrain, Kuwait reports, crude and shipping cost moves, any Apple details about the upgrade leasing program, and Tesla commentary or cash flow updates. Also watch for filings from the Plaintiffs' Counsel in those biotech investigations.
And in the near term, modelers and analysts will be focused on the accounting treatment for leasing, financing cost assumptions for device programs, and whether Tesla's spending cadence forces guidance revisions.
Final takeaways. 1. Geopolitics can quickly reprioritize flows across energy, defense, and FX. 2. Recurring revenue initiatives are getting premium treatment, but the details matter. 3. Heavy AI CapEx stories are under more scrutiny for cash runway and dilution risk. And 4. Legal and IPO scrutiny remains a meaningful source of sector dispersion.
Quick reactions.
Not what anyone expected.
Big move.
Okay, we'll wrap it up there. Reminder, this briefing is informational only. Analysts note the scenarios and data points to help frame risk and potential catalysts. This is not personalized investment advice, and it does not recommend buying, selling, or holding any security.
If you want to dig deeper on any of today's items, head to stockalpha.ai and use our Q&A feature. You can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more context and flow signals. Stay curious and keep your models updated.